What's going on, everybody? This is Pat Burke from Icon Trading, and today we're going to be figuring out how much shares we want to buy when we take a trade. Now, also, how are you guys doing through this quarantine? Because I know personally I am losing my mind. I need to get out of my house. I haven't got a haircut in 3 months, and yeah, I got to put this hat back on. So going back to the topic of this video, share size. Share size is extremely important. This is why some traders just don't make it right off the bat, because you got to determine your share size, right? You can't just shoot for the fences and buy as many shares as you can. So that's just retarded. Now, for share size, there's 2 things you gotta calculate first before you can decide how many shares you're gonna buy. One, you gotta decide your risk per trade. Now, this is very important. Now, what I mean by risk per trade is, let's say I have a $10,000 account, and I'm going to be risking 1% of my capital for every trade on that account. That means that my max loss on every trade should be $100. Now, that being said, on every trade, I should lose at most $100. Now, that's the first factor we gotta calculate. Our second factor, and I guess you could break it up into 2 factors, is our entry price and our stop price. Now, once we figure out our entry price and our stop price, we can determine how far away our stop price is from our entry price. Then, what you do is you take that $100 max loss and you divide it by your stop price. Now, for example, let's say our stop is 25 cents away from our entry. That means we divide 100 by 25 cents. And what does that give us? Well, 100 divided by 25 cents is the same thing as 100 times 4. So, 400 shares is how many shares we're going to be able to buy, but still continuing having our max loss at 100. So now, if you're more of a visual learner, because I know I am more of a visual learner than hearing people talk, and I know you don't want to hear me talk, let's throw it up on the screen to see exactly what we're looking at. Okay guys, so going on to my Excel right here, this is just a nice easy Excel that I made so I could just manually put in my entry price and my stop price so I don't have to do it mental and figure out how many shares I'm gonna buy. So now, as you can see right here, these purple, the purple highlighted cells are where you put entries into, as well as putting the account value and risk. So as we can see, for this example, we're using account value is $100,000 to make it nice and simple, with a risk of 1%, and then we put the 2 entries in as marked by the red arrows, which is our entry price and our stop price, and then right under it will give us the shares taking. Now I'm highlighting it right now so you guys can see the formula used, so you guys can make the exact same Excel file. Now all it is you're timesing the account value by your risk, and you're dividing that by the spread of the entry and the stop. Now, if you're short selling, and all you have to do is you gotta make your stop the first number and your entry the second number. So you just gotta switch them around if you're short selling. Other than that, that's really it. You could add other risk factors. For example, we have a 1.5% and 2% risk, which I put in the level 2 down. And yeah, I guess it really just depends on what your risk is for the trade. For example, day traders are gonna take usually 1% risk on every trade, whereas if you're a swing trader, you might take that 2% or 3%. So it's really nice to have all the options above. So determining share size in trading is probably like the most straightforward thing you'll get in trading. This is one thing where you could really put actual formula into place where it's gonna always be the same every single time. Now, one thing that's a little bit challenging when you're doing, when you're figuring out how many shares to buy is when to risk up or when to risk down, because there's going to be times when you're gonna have to risk up and there's gonna be times when you're gonna have to risk down. And I'm gonna save that for another video because that's important to know how to do. Now, also, one other thing that I would like to point out is that your risk size is gonna also be dependent on what kind of trading strategy you're gonna do. For example, you're not gonna use a 1% risk if you're investing. It's not really logically the best decision. Now, for day trading, since you're doing so much volume of the trades, you wanna use a 1%. At most 1%. Now, if you have a smaller account, you risk up a little bit just so you have to make some money with commissions and everything. So you might want to risk up a little bit. You might not want to use 1% risk on a $5,000 account, even though you can't really day trade. But if you're using some short stuff, maybe you want to risk up a little bit. Now, if you're swing trading, you probably want to use more than 1% too, because swing trading, you're not trading as often. So you probably want to take up a little bit more risk when you're swing trading. Day trading, like I said, 1%, that's a lock. That's a bigger lock than Tom Brady losing to Eli Manning in the Super Bowl. I hope you guys enjoy the video. Hit that subscribe button, and I'll see you guys for the next video. Peace.